No.
All right, I think we got everybody here for this evening. We'll go ahead and call the meeting to order of the Finance and Audit Committee. All right. So on the agenda tonight is the Hudson Deal 2024 fiscal audit. So I guess I will turn it over to Lindsay and I will let you take off.
All right, well, thank you. We're here to present the 2024 audit. And we'll just dive right in. Everyone hopefully has a hard copy of the statements in front of you. And we'll just kind of walk through this. If you have any questions along the way, please stop me and we can discuss. The first few pages are our independent auditor's report. Standardized wording we issue on every audit, page 1. This report gives our opinion on whether the financial statements are in compliance with accounting governance. And it states that management is ultimately responsible for the preparation of the statements. The second paragraph on page 1 gives our audit opinion. In our opinion, the financial statements are presented fairly in all material respects. It lists the different statements with accounting principles generally accepted in the United States. So that means that we believe these are fairly stated, and that is an unmodified opinion, which is the best opinion you can get. So a clean audit opinion.
Good A+.
That's right. It goes on with standardized wording. Again, it says management's responsible. Our objective is to obtain reasonable assurance that the financial statements are free from material misstatements. And that's basically it. The most important part is the audit opinion. Then following the audit report on page 4 starts management's discussion and analysis. In this section, the financial statement information is summarized and compared to the prior year. It's the only place in the statements where we can see the 2 years side by side and do some comparisons. So we're going to start here and on page 6. On page 6 is the statement of net position. This is on a full accrual basis. I guess before we get into this, in government financial statements, there are 2 different types of accounting. There's full accrual, where all assets are shown as, capital assets are shown as assets. Debt is shown as liabilities, versus in the fund statements, those are all shown as expenditures. So this is more comparison to what a for-profit company would look like, this first set of financial statements that we'll look at. So on page 6, under statement of net position, we have total assets for the year. You can see the FY24 column compared to the FY23. And again, this is all assets owned. Current assets, which are cash, investments, were almost 32 million at the end of the year. The next item down, which we will dive into a little bit later, is the net pension asset. That is actually it's a net difference of what the district has set aside for retirement compared to what liability there is. And you combine the two and the net difference. So the district actually has 2.5 million more in assets set aside than a liability. And we will look at that a little bit more later, but that's what that number is. Next down is net capital assets. That is all the capital assets owned by the district, so 25.2 million. At the end of the year, total assets were 59.69 million. The next line down is deferred outflows. Those are related to pension. It's an amortization of some calculations that the actuaries do. They give us the number, we record it. That's the deferred outflows and inflows are that. Next is liabilities, current liabilities. That is your accounts payable, accrued wages, and the following line is non-current liabilities. And that is, although the library district doesn't have debt, there are some long-term liabilities, long-term lease obligations, compensated absences, and that is what gets reported there. And ending total liabilities were nearly 3 million. And in each of these categories, you can compare it to the prior year. Total assets are up in that far column. approximately 2 million. Liabilities stayed very consistent, just a $12,000 difference there from year to year. And when you look at total assets and compare it to liabilities, that difference is this bottom section called the net position. So assets less all liabilities get you to net position. Net position is then broken down further into different categories. So the first category is investment in capital assets. That's money that's it's not liquid. You cannot spend that money. It's set aside in capital assets. The next item is that net pension asset we talked about. Although it is an asset, it is sitting in investments that are specifically for the pension. After taking out those two items, you have unrestricted. That is the amount that is available for spending in the future. So at the end of 2024, there was $31.8 million sitting in unrestricted net position. Total net position was $58.2 million. We'd like to compare that to last year to see if we're improving or there's been some decline. Well, that was a 3.5, the far column, that was a $3.5 million increase over the prior year in total net position. And that 3.5 million, you turn to page 7, you can see where we get to the 3.5 million. This is the statement of activities that shows all of the revenues earned for the district, no matter when received. And that's the difference between government-wide and what we will look at, which is the fund, which is how you budget. This is no matter when it's received, it has been accrued on this statement. So total program revenues of 1 million. You can see the different categories that make up total program revenues and that it increased $400,000 over the prior year. Majority of that fell in capital grants. And I know that there were some extra capital grants this year for the hotspot.
Correct. Most of that, or the majority of that's federal funding, and that would be the Emergency Connectivity Fund and E-rate. And that's a program that provides discounted telecommunications for us.
Yes. So those are total program revenues. Next, you have general revenues. Those are your taxes, investment earnings, donations, and then miscellaneous. Taxes is by far the largest category at 23.6 million compared to 22.5 million the year before. So a $1.4 million increase in taxes. Total revenues, 25.8 million compared to 24. You can see the breakdown of those increases and decreases throughout the categories in that far column. Moving down, expenses, total expenses, 22 million compared to nearly 20 million the year before. So a $2.3 million increase in expenses. And again, you can see in the far right column, majority of this is salaries. This 1.2 in technology, there was a change in the way long-term technology agreements have to be recorded in the prior year. So that number looks a little lower than it was when we implemented that. It's more consistent on the fund basis, and we'll look at that. Again, 22 million compared to 20 million, so a $2.3 million increase. And total revenues of 25.8 less the expenses is how we got that $3.5 million change in the net position during the year. Now, this is on the full accrual. The way you budget, the way you manage the daily operations is on the fund basis. So we'll look at that next. If you go to page 12. So now we're out of the management discussion and analysis part of the financial statements, and we're into what we call the basic financial statements. So on this page, it is the statement of activities. The first column, the general fund, is what we'll focus on here. If you move across, that adjustments is how we get from the fund basis to the government-wide basis that we just looked at. So that column is all the adjustments we have to make to go from this current resource focus, which is the fund basis, to the full accrual, which is the government-wide, that third column over. So right now, we're going to focus on the general fund. This is what you budget. This is what you use to manage the district. So first, section, expenditures. And these will be in a little bit different order here. Total expenditures were 22.6 million. And see the different breakdowns. You don't get the comparison on these statements. Governmental statements do not have comparative information in the basic part of the financial statements. But I looked at it before I came. That's very consistent with prior year. That is around $8,000 difference to what it was. So those total expenditures, what it costs to run the district, were 22.6 million. Moving down, program revenues, we talked about those charges for services for 318. And down to general revenues, and we've talked about most of these. You can see all the different items. Taxes primarily making up the most of that. So on a fund basis, on a current focus of what current resources the district has and what expenditures it had to pay out, revenues exceeded expenditures of 3 million. So you could look at fund balance of 27 at the beginning of the year, that second to last line, and the bottom line being the ending fund balance in the general fund of 30 million. Now that is also broken down into different categories. If you look at page 11, you can see the breakdown of that 30 million. You see how much is truly unassigned, how much is committed for future capital projects, and how much is non-spendable. So the bottom section of that page 11, fund balance, says fund balance is non-spendable. That is prepaid expenses. So that gets shown as non-spendable. It's already been spent, sitting as an asset. Committed for future capital projects, 4.3 million. That is what the board approved in a resolution set aside for future capital projects of 4.3 million. That leaves 25.6 million of fund balance to be spent on the next year's operations. So that's pretty much the summary of the financial statements, both on the accrual and the current economic, the fund balance, the fund method. Following the financial statements are the notes. So they start on page 13. These are called the notes to the financial statements, and they give additional information for many of the items we just talked about. For capital assets, you can see a breakdown, the detail of the different categories, how much they've been depreciated. You can see a breakdown of debt. You can see detailed information on the pension. We're not going to go through these in detail. These do not change much from year to year. You can read them, get additional detail if you need it, but they stay very consistent from year to year. The one page I do want to draw your attention to. So in the footnotes, you can get some very detailed information on the pension, and feel free to look at that. But we're going to look at the summarized version on page 35. We're going to flip all the way to the supplementary information in the back. On page 35, you can see 10 years of information. We're going to look at the 2024 column. That first section is total pension liability. That is the estimated liability to pay benefits that have been promised to the current employees. So at the end of 24, the actuaries have estimated a liability of $25.6 million that will be due to pay the current employees benefits that have already been promised to them. The district then sets aside specific assets to pay that liability. That next section down, plan fiduciary net position, those are the assets that have been set aside. And this is the change in 2024. You can see the contributions, the benefits that were paid out, the investment income, and the ending net position was 28.2 million. Then you compare assets to the liability that's been estimated, and that difference is 2.5 million on the asset side. And that's where we talked about where that net pension asset was showing. It's the net difference between the assets that have been set aside and the liability that will be due. So I always like to point that out. This is one of the only places in the statements you can get pension information. And even throughout the year, it's hard to see this information. Really, the audit is where you get to see. And you can see across the years, this net position as a percentage of total pension liability, it's been very healthy for nearly 10 years. The asset has either exceeded or been right at the liability over the last 10 years. So the pension plan is well funded with assets at this point in time to fund that liability.
Can I make a comment?
Yes, please.
So Blockers just released their report for the fiscal year 2024. And they announced that they are overall as a system 94.3% funded, which is still healthy. It's dropped down a bit. And they said that's because a number of employers have changed their salary structures and schedules. So with that being said, we just recently did that. So that means actuarially they'll go back in and then they'll decide what we need to do as far as funding. Because increased salaries means increased contribution. A positive note is that for Missouri law, they can only increase that contribution rate 1% a year. It's capped. So we will see that in the future.
Okay, good point. And also within those estimates are, these actuary numbers are they're estimates for every single thing you can imagine. For inflation, for salary increases, for how long an employee is going to stay. Those can also change from year to year. So right now that's sitting at a very healthy asset side. We can see this number swing largely from year to year because there are so many estimates built into that number. So just keep that in mind if next year this does swing, if they've estimated that investment returns are going to be this level and they come in here or here, that can significantly change these amounts. So just keep that in mind as they come up with these numbers. They are estimates and they can change significantly from year to year. So we've covered most of the high points. One other section to look at is on page 33. If you just go back a couple of pages, this is where within the audited financial statements, you can see the budget. I know you've seen these before, but this is where you can see the original and final budgeted amounts compared to the actual as presented in the financial statements and the variance from the actual amount to the final. This page 33 is the summarized version. You can look at a few pages back. You can see the very detailed version that breaks down into the expenditures to much more detailed level. And that is back on page 37. We don't have to look at it now, but if you want to see the additional detail, it is there to look at. So the last item I wanted to address before we can discuss whatever you'd like to discuss is our management letter. And I think it's the last section. It's probably separated by a blue piece of paper. This is our management letter, our communication to the board upon the completion of the audit. This is very standardized wording. Within this communication, if we had disagreements with management, if we had delays in getting information, it would be reported in this letter. We do not have any of those items to discuss. It's all very standardized. The few things we'll just touch on. At the bottom of the first page, we already kind of discussed this, it just points out that there are estimates within these financial statements. Changes in estimates from year to year can create large changes in the financial statements. So we pulled out the largest estimates that are within its capital assets. It's right behind the blue page at the very back. The estimated lives of the of the capital assets, if those would change from year to year, if you decided something, its life should be shortened or lengthened, all those changes in lives then determine depreciation expense, which is a large expense of the districts. And then following that one is all the estimates that are involved in developing that pension. And again, that can be a very large number. It can be a very large liability for some places. And when it becomes a large liability, then you start seeing big changes in that position. So just something, there's so many estimates in those, especially that pension that can change, that we always like to point that out, and it is included in this letter. The next page just talks about all those things that could have been if there were issues. We did not have any of those. It also states we did not have to make any audit adjustments. So that tells you that the information you're seeing on a regular basis, the monthly financials that you're using to create the budget, to run the district, it's accurate information. We aren't coming in and making these large adjustments to these numbers. So you're using reliable, accurate information based on what we found in this audit. And the final, on the last page of this report, it's a recurring comment we've had for the last few years, and it just discusses the role of the CFO as the super user of the accounting system. And that is changing. There has already been, the CAO has been given access now, so they can go in at any point into the accounting system and look up whatever information they would like to see. And that will change also as the new CEO comes in, they will also be given access. So there's also mitigating controls that you already have and had throughout the year that we pointed out on this last page and that have been there. The only thing we would like to see, and I think this will change is that as the changes take effect this next fiscal year, is that any journal entries that the CFO makes be logged and reviewed by CEO, CAO. So there's some other eyes other than the CFO. But otherwise, there's another management letter that we do have to issue if we find deficiencies and control weaknesses, and we did not have to issue that. So that's very good for the district. We're not finding deficiencies. We are comfortable with the controls that are in place that we've walked through. So just want to point that out. It's not in here, but you should get credit because it's not in here. So that is what I.
An additional note, as far as Tiffany's access, so when you look at all of the journal entries that are made, our system allows for her to filter, and she can see anything that's been created, approved, posted, that type of thing, like by the users, so she'll be able to.
Will she be able to approve within the system, or how will?
She can see the entire system, but she's view only. She's not allowed to add,
Okay.
change, delete, or anything of that
So
sort.
as long as there's documentation of that review, even if it's just on a spreadsheet that you note, I reviewed on this date, that's great for us. And we'll take that comment out next year and it will no longer be in there. Okay.
Perfect. Thank you, Lindsay.
You're welcome.
Really good.
Yeah, excellent.
Great.
Julie, did you have anything else that you wanted to add while we're on the overall review of the
I don't.
audit? Okay. All right, then I will open it up to fellow trustees for any questions, discussion. Yes, ma'am. Go ahead.
Yes, thanks, Justin. So just a quick question in relation to the pension. I don't remember what page it's on now that we were just talking about. I want to say maybe 35, maybe. But there was so obviously Loggers is the one who handles our pension plan. So do they submit a report to us that kind of states the net investment income, all that stuff, or how are those numbers determined?
Yes, Loggers provides all of this information in a detailed report that comes every November to us. I'm not sure if Julie gets other information throughout the year, but we send correspondence to them. They send it directly to us. So that is how we gather. It comes directly from Loggers. And it's standardized reports that they give any of the entities that are within their system. So yes, this comes directly from Loggers to us. And as far as throughout the year, so that you know that information, I'm not sure what they.
So they post some of the information within the Eclipse, that is their administrative center. So that I get to see, like other members.
Right.
Okay. And the only other question I have is obviously, I mean, being in IT, I don't really enjoy ever having the keys to the castle of a system as well. And I'm not saying that, Julie, you're doing anything wrong or bad. But, you know, I always like having, different, workflows in place to make sure that any action that's being done in the financial system is marked off by at least more than one person. So one person just can't do everything. So I'm hopeful that the system we have in place in the future will just kind of be that checks and balances for everybody and make sure that, there's no even kind of viewpoint of something being wrong with the way we're doing things. So I appreciate that.
I just want to make an observation here that I'm assuming is correct. On page 33, when we're looking at variances, if I'm reading this correctly, basically our revenues exceeded budget by almost $1.5 million. And our expenses actually fell short of projections by about 4.6.
That's correct.
So we had a $6 million positive variance
Yes, that's exactly right. And
between revenues and expenditures.
I don't know if Julie wants to add, I'm not involved in that. We just report the numbers, but I'm assuming on that revenue, some of that is that federal grant.
That is correct. So we had state aid and we had the federal grant, which is the $659,000 variance, which was strong. Our investment earnings, they were also with increased interest rates, very strong. So you saw those two items. It's really close on the tax line. As far as the expenditures, salaries and benefits does reflect the fact that our staffing was not full. We had closures for renovation and we did not staff up because of that. Staff were reassigned. That will change in fiscal 25, obviously. Materials was consistent. The other area relates to the capital outlay. Our renovations were actually targeted at first to be completed by December of 2024. Now it is February of 2025. So what we thought would have been happening with MK, which is Mid-North Cadell, did not happen until truly this fiscal year. So that capital outlay you'll see in fiscal 2025.
But Julie, that was included in the budget for 2025, right? That outlay being hit in that year.
Correct.
Yeah. So it's really kind of an offset, Dan, in terms of, we anticipated it happening in, 1 year. It didn't happen. We put it in a fund balance, but we're going to use that because it's essentially committed via the construction.
Right.
Very good. Anyone else?
I don't have any other questions. It's very straightforward. Yeah.
Yep. Great, perfect.
I do have one final question. Is it Lindsay? Sorry, I might have missed.
It is.
Okay, Lindsay. So you request documents from finance. So can you just give us a real basic, what are you looking for? What kind of things are you asking for over a certain, number of months or whatever it is? You're kind of picking and choosing, hey, can you send this to us? Can you send this to us? And then making sure everything matches up, right? Can you just kind of give us a quick scenario of that?
So we develop a materiality first based on, we have some calculations we use based on your information. And then we develop different thresholds. We have ones that anything over this amount, as far as invoices, receipts, that we must see documentation for. Or for revenue, we go directly to the source. We confirm it. We send letters to them for them to tell us, how much did you send the library? And then we make sure that it matches what the library has recorded for revenue. So most of that we try to get externally, not internally. Expenditures, then we come in and look at various invoices for it depends on what section we're working on, but any high level ones or higher dollar ones, and then we do sample for many different things. It's hard to summarize it in one. For accounts payable, we're looking at what did you pay after year end? Did you accrue everything you needed to in this year that related to this year? We test payroll by looking at different payroll reports. We look at credit card reports. We look at many fixed asset invoices since there's so much construction going on. We confirm all investment balances and cash balances directly with the bank. So we require them to tell us what they hold in the balance at the end of the year, and we make sure that agrees or has been reconciled with what the district says that is being held there. Anytime we can get the information external, we do that. And then we do sample, like you said, we sample different invoices, looking for approvals, looking for amounts, making sure that accruals, items have been recorded in the proper period. And we also do a walkthrough of all significant processes, which we payroll, accounts payable, accounts receivable. We go through, basically, we take a transaction and we walk through it from the start. How is it initiated? Who gets this bill? Who does what with this bill? Who records it? Who reviews it? Who authorizes this disbursement? And we walk through every stage of those processes and we document it. And that's what we're looking at. What controls are in place? And if fraud wanted to, or if something, just an error, keying errors, anything that can happen, we look, is there a control in place that we feel like would mitigate the risk of any of these different items happening? So we do that, not every single process, but the key processes, we look at what's happening internally and document all of that and the controls that are in place to determine if we think there's any areas where there could be some improvements in that. And it's very good, minus the computer issues we've talked about that are in process of being corrected. Anything we've seen has been very tight controls. So hopefully that helps a little.
Thank you.
Okay.
Any other questions or discussion?
The only other one I had that we went over fairly quickly is on page 33. There's a debt service line item
That,
for 436,000.
we thought that might come up. So within the last 2 years, GASB has changed how you record leases and how you record long-term technology contracts. And used to, you just paid your lease and it was recorded in the line item it related to. Now they require you, any payments you make on those leases and on those technology agreements now have to be shown as debt service payments. So Julie and I talked about that. Next year in the budget, it is budgeted. It's just not budgeted on the debt service line.
Okay.
So next year, when you guys do the budget, it will be, instead of being budgeted whatever line item it was for those specific payments, it will now be on the debt service line
So it
item.
wasn't an oversight.
No,
on our
that was,
part.
yeah. It was-
Okay, thank you.
Yes.
Great. Any other discussion or questions? The audit report for 2024. Okay, well, the board does have a few items of business to take care of quickly, but I think that's all we need from Lindsay. So I think
Thank you very
we'll
much.
release you and let you have your evening.
All right.
Yes.
Thank you guys, and you'll let me know as soon as approval is, and then we will issue, these are drafts. We will date these and we'll issue final without the preliminary marked on it as soon as we are told that they're fully approved. So, all right, thank you guys so much.
Perfect. Thank
All right,
you.
have a good evening.
Okay, so part of the package, you guys should all have the draft minutes from the December 19th, 2023 Finance and Audit Committee meeting. So everyone wants to take a minute, review those, and I will seek a motion for approval of those minutes.
Is the approving entity the Finance and Audit Committee or the board?
Well, the Finance and Audit Committee is the entire
Yeah.
board.
It was
So-
included with the agenda that she said yesterday.
One the same?
Okay.
Correct.
I thought it was just the executive committee,
Last year's meeting.
the 4 officers.
The 4 officers are the Finance and Audit Committee. So Justin, Cindy, Buddy, and Matthew will approve the minutes and also make the recommendation to the full board for
Okay.
approval of the audit.
Perfect. Thank you. So I will seek a motion from Finance and Audit Committee for the approval of the December 19th, 2023 meeting minutes.
So moved.
Second. Second. Having a motion and a second, all those in favor, say aye.
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 Any opposed? The ayes have it. Motion is approved. The final piece of business would be the recommendation of the board for the 2024 finance and financial audit. And I would seek a motion to recommend to the board that we approve the 2024 audit as presented.
So moved.
Is there a second?
Second.
Have a motion and a second. All those in favor say aye.
Aye.
All those opposed? The ayes have it. The motion passes. Seeing nothing else on the agenda, I would entertain a motion to adjourn.
Motion to adjourn.
Second.
All those in favor?
Aye.
Aye.
Ayes have it. We are adjourned.
Good work, Justin.
Thanks, sir.
Yeah, thanks.